Hello everyone. Welcome to the virtual class of investment accounting. In previous 5 sessions, I have discussed basic concepts as well as practicals of investment accounting, including method of evaluation of the closing stock using FIFO method. Today, in this session, I would like to incorporate last in first out, that is LIFO method. It is also one of the most important variety of this chapter. Before discussion of the solution, let us have question. From the following information provided by Shri Prakash, prepare 12% Arman Limited's bond account for the year ended on 31st March 2019. Information related to accrued interest as on 1st April 2018, that is opening balance rupees 2700 is given. On 1st September 2018, Cum-interest purchase for the face value of rupees 20,000 at the rate of rupees 105. On 1st October, X-interest sell at the rate of rupees 96 for the face value of rupees 30,000. November 30, face value 10,000, market rate 95, X-interest purchase. And last transaction 31st January 2019, 20,000 rupees face value, market rate 102 per 100, and it is Cum-interest sell. Notified date for payment June 30 and December 31st, that is twice in the year. The cost price of the opening balance of the bonds is 5% higher than that of face value or nominal value. The investor is following LIFO method for the valuation of closing stock. We have discussed all other transactions in earlier lectures. So today, my focus is to discuss closing stock of the investment using last in first out method. As usual, first of all, prepare the flow chart so as you can easily understand the transaction. The dates of interest are June 30 and December 31st. So twice in the year for the period of 6 months each. Last date of payment before 1st April 2018, it is December 31st 2017. So duration between last payment date, that is December 30 2017, and the first day of the current financial year 1st April 2018, it's 3 months. So there is accrued interest of 3 months on opening balance of the investment. So here, using this flow chart, we can easily understand that there is accrued interest of 3 months on opening balance. And the examiner has given information related to accrued interest on opening balance. So from that interest, we need to calculate the rest of the items. For your reference, I have prepared a flow chart with the period. So as from this, you can easily understand the moment of the transactions. The first transaction, before preparation of our flow chart right from first transaction to last transaction, it is necessary for us to calculate opening balance. Face value of the securities held on 1st April 2018, that is on the very first day of the year, it is not given. And without information of opening balance, it is very much difficult to prepare the sequence of the transaction. So before arrangement of the sequence, it is necessary for us to calculate the transaction. And for this, we have already computed earlier that there is accrued interest for the period of 3 months. Amount of interest is already given in the question. It is rupees 2,700. The formula for the calculation of interest is I is equal to PRN upon 100. Here we have information of I stands for interest, 2,700. Principal amount, that is a face value or nominal value of the securities, which is missing item in this question. Rate of interest is already given in the question, and period that we have computed is 3 months. Use all the information and apply in the formula so as you can calculate value of P. P stands for principal amount and P equals to 90,000. So one can say that face value of the investment as on 1st April 2018, that is first day of the financial year, is rupees 90,000. And as per information available to us, market cost price is 5% more than book value. So if book value or face value is 90,000, 5% extra, that is a 4,500. So cost of opening stock is 94,500. It is the first and foremost step for us to start our answer. Now arrange transactions in the sequence. 1st April 2018 opening balance, it was actually not given, but we have completed the calculation with the number 1, rupees 90,000. Then June 30, 2018, it's a date of interest, and on this date we have received interest on rupees 90,000 as neither purchase nor sale takes place between 1st April to June 30. 1st September 2018, we have purchased for rupees 20,000 and the period of accrual is 2 months, because now we need to start our calculation from June 30 that we have discussed earlier. 1st October 2018, sell 30,000, period involved for the calculation 3 months. November 30, 2018, purchase rupees 10,000 and period involved from June 30 to November 30, July, August, September, October and November. So 5 months. Then December 31st, 2018, notified date for the payment of interest. Here we need to calculate the amount of investment held on December 31st. So on June 30 it was of rupees 90,000. Then we have purchased for rupees 20,000. So 90,000 plus 20,000 equals to 1,10,000. Then we have sold security worth rupees 30,000. 110 minus 30 is equal to 80. And again we have purchased for rupees 10,000 on November 30. So 80,000 plus 10,000 equals to 90,000. So on December 31st, 2018, that is the date of interest, we are the owners of the security worth rupees 90,000. So we are in receipt of the interest for the period of 6 months on the security worth rupees 90,000. Then January 31st, 2019, we have sold security worth rupees 20,000. Duration between these two transactions from 31st December 2018, because when the transaction takes place on January 31st, the last payment date of interest is 31st December. So there is a period of 1 month. And 31st March 2019, last day of the financial year. On this day, two different transactions taking place. First, valuation of closing stock and accrued interest on the investment held on 31st March. On 31st December, we were owner of rupees 90,000, of which we have sold security worth rupees 20,000. So 90,000 minus 20,000 equals to 70,000. We can arrange the transaction in the sequence 1, 2, then 3, then 4, then 5, then 6, 7 and 8. Out of these 8 transactions, we have completed calculation of transaction number 1 before preparation of the flow chart. So let us move to transaction number 2. It is all about interest received on June 30, 2018. Face value of the securities held by the investor on June 30, 90,000. period involved for the calculation of interest 6 months, and amount of interest received by the investor at the rate of 12% for the period of 6 months on face value of rupees 90,000. So amount of interest received by the investor is rupees 5,400. Simply, we need to pass journal entry, bank account debited 5,400 to interest account 5,400. Let us enter the transaction in the ledger. First of all, we need to enter opening balance 90,000 rupees, accrued interest given in ready-made form 2,700 and cost 94,500. Here we have computed face value and cost price of the investment, and that is why it is marked with the blue color. So as you can easily recognize, that amount of interest was given, and using that amount of interest we have completed a calculation of face value as well as cost price. Then second transaction, it is all about receipt of the interest 5,400. Now transaction number 3, purchase on 1st September 2018. Face value rupees 20,000, market rate rupees 105, cum-interest. Period involved in the calculation of interest 2 months, and information of brokerage is not given, so it is not affected to our calculation. We know how to do it. It is cum-interest purchase. So 20,000 multiplied by 105 divided by 100 rupees. So 21,000. If the brokerage is charged, then we need to add the amount of brokerage. But here information of brokerage is not given. This is all about cum-interest purchase. So total amount paid for purchase is rupees 21,000. Now we need to deduct amount of accrued interest on these transaction in order to calculate the capital cost. Interest is always calculated on face value. So 20,000 face value, 12% rate of interest, and period involved is 2 months. So amount of interest comes to rupees 400. Out of 21,400 rupees paid for interest. So cost price or capital cost for the transaction is 20,600. 12% Arman Limited's bond or investment account debited 20,600 at cost price. Interest account is also debited for 400 rupees, and amount paid credited to bank account by rupees 21,000. Now we need to enter this transaction in the ledger. It is a transaction of purchase. Number 3, to bank account, face value 20,000, amount of interest included in this calculation 400, and cost price of the transaction is 20,600. With this, transaction number 3 comes to an end. Now move to transaction number 4. It is all about sell on 1st October 2018. Face value of the transaction is rupees 30,000. Market rate is given rupees 96 per 100 rupees, and it is X interest rate. Period involved in this transaction for the calculation of accrued interest 3 months. Information of brokerage is not given. Using this information, we can easily calculate capital cost of the transaction. It is rupees 28,800, and it is X interest transaction. We need to add amount of interest accrued on the security of rupees 30,000 at the rate of 12% for the period of 3 months. That is rupees 900. So total amount received, because it is a transaction of sell, so we are in a receipt of the amount from buyer because we are seller. I don't want to explain the calculation of this all amount step to step because we have discussed in detail in earlier lectures. So our core purpose is not to revise this. So pass journal entry, bank account debited with the total amount received 29,700 to 12% Arman Limited's bond account or say investment account. It is credited to, it is always it is credited at cost price 28,800 and amount of interest received and included in this transaction rupees 900. Now enter this entry into investment account. Credit side of investment account 1st October 2018 by bank account. Transaction number 4 that I have marked for your reference. Face value rupees 30,000. Interest involved in this calculation 900 and cost price 28,800. After this transaction, we need to move towards transaction number 5. It is all about purchase on November 30, 2018. Face value of the transaction is ready-made given by the examiner in the table rupees 10,000. The rate of purchase X interest is rupees 95 per 100 rupees and period involved in this calculation is 5 months. Information of brokerage is not given. And if it is given, you all are aware what to do with the brokerage. Use the prototype calculations that we have applied earlier in many questions. Market value of the securities at the rate of 95 for face value of rupees 10,000, 9,500. It is X interest purchase, so we need to pay amount of interest extra. So capital cost is rupees 9,500. Here we need to pay amount of interest in addition to the rate decided for purchase. So we need to calculate rate of interest at the rate of 12% for the period of 5 months on face value rupees 10,000. So amount of interest comes to rupees 500. So here we need to pay rupees 10,000 to the seller because we buy the security. Journal entry 12% Arman Limited's bond account at cost price. When you purchase, it is always debited at cost price, and when you sell, it is always credited at cost price. So in case of purchase, it is debited at cost price, which is rupees 9,500 over here. Interest debited by rupees 500 and total amount paid rupees 10,000 credited to the bank account. With this journal entry, let us move to ledger posting. November 30, 2018. Transaction number 5. For your reference, I have marked with the number of transaction. To bank account. Face value of the transaction is rupees 10,000. Interest involved in this calculation rupees 500 recorded in the column of interest, and capital cost or cost price is rupees 9,500. So we have completed transaction number 5 and entered in the ledger. Let us move to transaction number 6. It is related to interest received on December 31st, 2018. Face value of the securities held on December 31st, rupees 90,000. If you remember, at the time of preparation of the sequence of the transactions, we have completed calculation of the amount of the securities held on December 31st. So simply you need to copy that 90,000 from the sequence chart. Period involved in the calculation 6 months and amount of interest received. That we need to calculate using the formula I is equal to PRN upon 100. Principal amount 90,000, rate of interest 12%, and the period involved in this calculation is 6 months. So 5,400 rupees received on December 31st, 2018. Let us pass journal entry for the receipt of the interest. Bank account debited rupees 5,400 to interest account credited rupees 5,400. It's a very routine journal entry for the receipt of the interest. So nothing is new in this. Now enter this transaction into investment account. December 31st, 2018 by bank account. Amount of interest received on investment 5,400. We need not to enter face value or cost price in case of transaction related to interest received. So enter the value of interest received on the securities. Now move to transaction number 7. Sell on January 31st, 2019. Face value of the transaction rupees 20,000. Market rate rupees 102 cum-interest. Period involved in the calculation 1 month, because the last payment date is 31st December. So from 31st December to 31st January. So there is a gap of only 1 month between two transactions. Calculate cum-interest sell. As you all know how to calculate the transaction related to cum-interest sell. Market value of the securities at the rate of 102 per 100 rupees, 20,400. Information related to brokerage is not given, so we are not supposed to calculate brokerage. Total amount received is rupees 20,400. It is a cum-interest sell, so we need to deduct amount of interest due on the security. 20,000 rupees of face value, 12% rate of interest, and period involved for the calculation is 1 month. So it is rupees 200. So capital cost for the transaction is 20,200. Let us pass journal entry in the books of account. Bank account debited, total amount received rupees 20,400 to 12% Arman Limited's bond account, or say investment account. It is credited at cost price 20,200 and amount of interest credited with rupees 200. Now post this transaction in the ledger of investment account. By bank account 20,000 rupees face value, interest involved in the calculation 200 and cost price 20,200. Now last two transaction. Number 8 related to accrued interest on closing balance. That is on the last day of the year. On the last day of the year, we are holding securities worth rupees 70,000 that we have decided at the time of preparation of the sequence. Period involved 3 months, because last payment date is 31st December 2018. So January, February and March, 3 months in full. So amount of interest accrued on this security on last day of accounting year, I equals to PRN upon 100. 70,000 principal amount, rate of interest 12% and period involved is 3 months. So 2,100. This amount of interest is not received on 31st March. It is receivable on 31st March. Let us pass journal entry for this transaction. Accrued interest account debited 2,100 to interest account 2,100. We need to enter this entry into ledger. 31st March 2019, last day of the accounting year, by interest receivable or accrued interest account 2,100. With this, calculation of accrued interest on closing balance comes to an end. Let us enter into last and most important transaction. It is all about evaluation or calculation of closing stock using LIFO, last in first out method. It is a very first question of the chapter where we are using LIFO, last in first method, for the purpose of evaluation. Let us calculate closing stock at face value with the logical sequence following last in first out. Date, in, out and stock. First transaction A, on 1st April 2018, opening balance 90,000. No sale is there on 1st April. So closing stock 90,000, it is marked with A for the purpose of our reference. B, that is a second lot of the investment that we have purchased on 1/9/2018. Face value of the stock is rupees 20,000. So now there are two types of investments available to us in our stock. A, that is a first lot for rupees 90,000, and B, second lot for rupees 20,000. Now on 1st October 2018, we needed to sell for rupees 30,000, and how to sell that you need to understand. First of all, we need to sell from the last lot of purchase, and the last lot of purchase is 20,000. So out of these 30,000, we will sell 20,000 from B and 10,000 from A. For your reference, I have written over here last in first out. So we need to sell from last purchase. We need to sell for rupees 30,000. Let me explain again. We need to sell for rupees 30,000, right? But unfortunately, securities worth rupees 30,000 is not available to us in a last lot. So from last lot, we will be selling security worth rupees 20,000, and remaining 10,000 rupees sold from A. So it is written over here for your reference. Now what will be the position of stock? A, 90,000. Out of this 90,000, we have sold for rupees 10,000. So closing stock is 80,000. And B, 20,000 out of 20,000 sold by the company. So there is no inventory available to us from B. Now on November 30, we have purchased one more investment for rupees 10,000. So there are two different lots available in stock, A for 80,000 and C for 10,000. So now the last lot of inventory is 10,000 because we have purchased on November 30. On January 31st, we have sold for rupees 20,000. So again we need to apply our logic. 20,000. The lot of C is only of 10,000. So again we have to sell 10,000 from this A. So here it is written for your reference. Out of these 20,000 rupees, 10,000 from C, that was from last purchase, and rest of the 10,000 from A. So 10,000 from C, 10,000 from A, total 20,000. Now evaluation of stock. For the evaluation, A, out of A, rupees 80,000, we have sold for rupees 10,000. So the inventory is available to us at the end 70,000. And for investment C, we have sold investment C over here. So C, 10,000 minus 10,000, so inventory is 0. As compared to first in first out FIFO method, LIFO method is somewhat technical because it requires sharp calculation at each stage. Now, after calculation of closing stock of investment at a face value, the closing stock is 70,000 and it is from A, right? So it is at face value. Now calculate at cost price. A. What was cost price of opening stock? 94,500. That we have completed in our calculation. Face value 90,000. So simple cross multiplication. When face value is 90,000, cost price is 94,500. Out of this 90,000, closing stock is available to us for 70,000. So 70,000 how much? And result of this cross multiplication, 70,000 multiplied by 94,500 divided by 90,000 is rupees 73,500. So total inventory 73,500. Why it is a total inventory? Because from second purchase, that is a B, and third purchase, that is a C, nothing is available to us in closing stock. So as closing stock is a 0 for purchase B and purchase C, we need not to evaluate B and C. So the entire stock of rupees 70,000 is a rest with us from purchase A, or say opening stock. Now in our question, information is given that market value of the stock is 104. So we need to evaluate stock at a market value. Face value 70,000 multiplied by 104 divided by 100. So market value of the investment is rupees 72,800. Now closing stock at cost price is rupees 73,500, while market value of the closing stock is rupees 72,800. According to principle of conservatism, we need to consider minimum out of cost price and market value. So we will consider closing stock at rupees 72,800. Let us enter this transaction into ledger. March 31st, 2019, buy balance. Face value of the closing stock as per our calculation. Again, you can check over here. Face value rupees 70,000 and cost price 73,500, market value 72,800. So we have considered minimum out of cost price and market value. 70,000 face value and cost price 72,800. In this way, we have entered all 9 transactions one by one in our ledger. Now it is time to close the ledger. First of all, face value total remains same on both the sides, so there is no difference in the column of face value. Interest total of the credit side is rupees 14,000. So difference is available on a debit side by rupees 10,400 and it is transferred to interest and dividend account. Total of the cost column on a debit side is rupees 124,600, which is higher. That is why the difference is available on a credit side by rupees 2,800. This is the amount of loss that we need to transfer to profit and as a protocol of the accounting, we need to start our ledger for the next year with the closing balance available to us. Let us enter 1st April 2019, that is the beginning of the year 2019-20. Balance face value 70,000, that is available over here. Accrued interest 2100, that is available to us over here in the calculation. And cost price of the investment in opening 72,800. It was a closing balance of 31st March 2019. So it is opening balance for the year 2019-20 as on 1st April 2019. So you can prepare your account with 100% perfection in this way. I hope everybody is clear with the solution of the problem. Keep watching next sessions. Thank you. God bless you. Keep learning. Keep growing.